Hey, what's up guys? In this video, I'm going to talk about how you can find good stocks to buy. So before we get into any of that, my name is Dan. I do a lot of investing videos on this channel. So if you like investing, hit that subscribe button so you can see more videos like this one. Alright, let's jump into it. Okay, so how do you find good stocks to buy? Well, obviously, you know my channel. I'm a big fan of value investing, intrinsic valuation models, that kind of thing. So for me, it's all about the numbers, but how do you know which stock to even analyze in the first place, right? Well, rule number one, avoid the really hot stocks. If you see stocks everyone agrees are a good buy, no one disagrees, that's a problem. That's a stock that's probably not going to go out very much further. That being said, you can plug the numbers in. You can do some intrinsic valuation estimation there. If it turns out to actually be a good deal, maybe it's a good deal. But as a general rule, that's not where you're going to find the bargains. Rule number two, look for a boring business. Better yet, look for an entire industry that's so boring it makes you want to fall asleep. These are often where the good deals are. And it doesn't have to be the same industries all the time. The market definitely goes through moods. The market gets very excited about certain industries, and they get overly pessimistic about other industries. A good example of the market getting overly pessimistic is how it treated Intel. So Intel, mid-October last year, the stock price just cratered on their earnings announcement. Now, if we look at the details here, earnings of about $1.11 per share versus $1.11 per share expected. Revenue slightly beating expectations as well. So what happened? So around October 20th, around the time of that earnings announcement, you see stocks trading for about close to $54 per share. Right after the announcement, fell all the way to $44 per share. Lost about 20%, even though they beat expectations. Sometimes you can find entire industries undervalued. Here is Altria Group, big cigarette company, and the stock price really just drifted downward, getting down to about $36 per share around November last year. Okay, right now it's trading about 50 bucks. The same can be seen for British American Tobacco, with their stock price trending downward to as low as 32 bucks per share, now trading at about 39. So what these examples illustrate is that the market gets in a mood sometimes about a certain stock or an entire industry. The market can get overly pessimistic. In the long run, guys, in general, things are not going to change that quickly, okay? We have these secular changes, we have these shifts in powers over time, but they're over time. These things happen slowly. Overnight, you're going to tell me Intel is worth 20% less than it was yesterday? Really not likely, and so these are great buying opportunities. Rule number three, go small. So normally we say go big or go home, but I want to talk about going small stocks. The reason you can find better deals in small stocks is because fewer people are paying attention to them. And not just fewer people, you're essentially avoiding the big players in the market, the institutional investors, the hedge funds. These guys are trying to get bigger returns. They're managing portfolios of 10, 20, 100 billion, maybe even more than that. So for them to get interested in a stock, it has to be pretty big. So what you can do, you can look at a stock with market cap less than 1 billion or even less than, 3 or 4 billion. Pretty much guarantee not many people are watching that stock. You can then do your intrinsic valuation, apply your value investing principles. Much greater chance you're going to find a good deal there. Alright guys, that's all I got. I hope you found these little rules to be useful. I hope you use these rules and find really undervalued stocks and make a lot of money. Thank you for watching.